Welcome to Wall Street Confidential on TheStreet.com TV. Everyone knows that the market is just wild these days. And Jim, what happens when oil futures go down? What goes up?
All right, Brittany, the first thing you should do, here's the new handbook, okay? You see the oil futures down. Go buy Apple. Go buy MasterCard, okay? Just go buy them as fast as you can. Go buy Google. Why? Because the futures then go up. The S&P futures go up. When the S&P futures go up, it emboldens momentum people to come back to the market. When the oil futures are up, what do? They go buy potash because that's the equivalent of ag, renewable fuels. They go buy Exxon. They go buy Schlumberger. They go buy rig. When the oil futures are down, the S&P futures are now going higher because oil's reached a level where it's just completely counterproductive, except for the oil and oil-related. Immediately, people go in and they buy Apple and MasterCard. They go and they rush for Google. So just remember that's now here. This what my point is. Does it make any sense? Absolutely not. It doesn't. If you think about it as a rational market, but the market has never been rational ever, despite what everyone thinks about random walk and how there makes sense. The market is divided between momentum buyers and people who sit and bid. The bidders just sit there and wait for stocks to come in. That's how I do it for ActionAlertsPlus.com because it has a 6 to 18-month time frame. But Brittany, the momentum guys take stock. So they come in and buy stock and they move stocks. And that's what they've always done. They like to see their stocks go higher. They're disciplined in their own way. They're saying, listen, if Apple's up 2, I want to take it because maybe the trend's breaking. And you've got to play their game if you want to do day-to-day performance. If you don't want to play day-to-day performance, then you buy Apple on down days like we had last week, and you buy MasterCard on down days like we had last week, and anticipate a turn. But the problem is every day the oil futures are up, you'll lose the turn and you'll get hit a little bit more. That's why the value guys don't report all the time. The momentum guys tend to report regularly to their investors. Now, a couple of straddle names. The rails seem to do well in either case. Why that is? They're perceived as being both energy efficient and doing well when the economy improves. Probably really, they're a piece. They're a middle play. People try to take up retail every time oil goes down. I mean, that makes sense if you really think it's going to translate into lower gasoline. From 132 to 128 doesn't. If it went to 128 to 108, it would. But I see that there, when oil futures go down, people reach for VF Corp. VF Corp being the one that seems to be doing the best in this environment. I think they should reach for Walmart because Walmart does well in a slowdown. But I'm really embracing Apple and MasterCard as the anti-oil futures play, and how anybody who watches anything other than Wall Street Confidential will say that's lunacy. But it's the reality. And I never fight the tape in these situations.
Sounds
ever.
like a playbook on how to play the market right now.
Absolutely. Thank you, Brittany.
Thank you, Jim. Stay tuned for more Wall Street Confidential.